Hello guys, welcome back to my channel once again. And today we are going to do chapter number 9, part 2. In case you haven't watched the part 1, I would suggest you to go and watch it first. Then only you will be able to understand this. And in case you haven't, seen the chapter number 3, then you should also watch that because that is the chapter where we have calculated the security risk and return, which is actually very important to understand this particular chapter too. Now, till now, what we were doing, till now, we were analyzing the security individually, security X, security Y, and we were constructing a portfolio on that basis कि हमें कितना risk चाहिए, do we need a 0% risk, do we need a minimum risk, what were the type of investors. So till now we were doing the security analysis and we were doing the portfolio analysis, but now we will be doing portfolio selection. And of course, don't like to share and subscribe my video. Important terms. These are very important terms that we will be using throughout our video today. Optimal portfolio, market portfolio, CML and SML. Now, once you have completed this video, come back to this particular section, particular PPT once again, and you will be able to understand these terms very well. Other terms would be efficient frontier, efficient portfolio, okay, portfolio theory. So these are the various terms that you should be well versed before you go to exam. Now, what do you mean by optimal portfolio? Optimal portfolio is a portfolio which will give you maximum return for a given level of risk or minimum risk for a given level of return. कुछ समझ में नहीं आया, example से समझाते हैं. Now you have two options. Let's say risk is for security A and for security B is same, but the return is 10%, 20%. Which security? Why? Maximum return for a given level of risk. Okay, let's say another example. Risk is 10%, 20%, and return is 5%, 500. Minimum risk for a given level of return. Understood? Optimal portfolio is this, optimal portfolio is this. Now, in this video, we will be doing the portfolio theory and the capital market theory. Let's understand the, the basic. First of all, we will be understanding the portfolio theory. Due to a certain limitation in this particular theory, we came across the capital market theory. Okay. Then again, an extension was there, which was the CAPM model. Okay. We have to represent this graphically. We used CML, and to represent the CAPM, we used SML. Okay. So this is the, topics that we are going to cover in this. Okay. Now let's understand the first important thing, portfolio theory. Why there was a need of a portfolio theory? Why did the idea actually came up, by Harry Markowitz? It was required because it has to set the foundation for the selection of optimal portfolio by the rational investor. I have to select the optimal portfolio for my rational investor. And how am I going to do that? I am going to do that through expected return and risk, or can I call it as variance? Okay, so these are the topics that we have already covered. So that is, can I say this was just an extension कि हमने ये किया है, and हम अब थोड़ा better समझ सकते, we are in better position to understand this particular theory because we have done these two concepts already. Okay, so this model is based upon the expected expected returns and risk or variance. For exam point of view, only the practical part is important. You need to just understand, you need to just know that this concept actually exists. Nobody is going to, I guess, tell you to state all the 5 steps. The basis is risk and return analysis. In case you don't know these concepts, you need to check it out in chapter number 3 that we have already covered in one of our videos. Till now, what we were focusing on, diversification. We said you need to diversify your risk and invest in different types of securities. But Markowitz focused that yes, you need to definitely invest, but you need to analyze the security in which you are investing. And how will you do that? Depending upon the risk and return. So it was just an extension कि तुम diversify तो कर रहे हो, लेकिन तुम कौन सी securities में कर रहे हो ये देख लेना पहले. ठीक है? So this is the basic funda of the portfolio theory. First of all, are the portfolio theory model की assumptions क्या होती है? First of all, investor are risk averse. These are not important. These are just the basic you need to understand. Just read it once. Now you will be analyzing your portfolio on the basis of risk and return. You will be analyzing and deciding the securities, your optimal portfolio depending upon the risk and return, not other factors. You are rational. You are not irrational investor. You are very much rational investor. And investors have different risk and return preferences. Some are risk averse, some are risk neutral, and some are risk takers. Okay, now let's try to understand the steps for the portfolio selection. You need to just, go through it once. I don't think paper mein question aayega. Nobody's, going to tell you ki steps likh ke dikhao. Okay, now step number 1 kya hota hai? Setting the portfolio opportunity set. Now there are 1,000 and more than 1 lakh. Kitni securities are available in the market? You cannot invest in just all securities. Okay, so you need to make a opportunity set. You need to make out, your portfolio depending upon the risk and return. Let's say you want to invest in 2 securities. You sorted out ki A mein and B mein. Now there are 100,000 and possibilities कि तुम A and B में different permutation and combination apply कर सकते हो. For example, you decide कि मैं 1% of capital I will be investing in A, and in B I will be investing my rest 99%. Second possibility would be कि मैं A में 2% कर दूं and B में 98 कर दूं. So there could be 100 of thousands of feasible options that could be actually possible from just 2 securities. तो तुमने क्या किया? तुमने ये अपने portfolios कैसे करने? You just set it out the opportunity. मतलब तुमने ऐसे proper layout कर लिया. The second step would be determining the efficient set of portfolios. Now, once you have decided कि these are the portfolios that I could invest, A, B, C, D, E, F, ठीक है? So these are the securities, ऐसे 2 securities करके I have made a portfolio. Do you really think सारे portfolios में you can invest? No, you cannot. क्यों? क्योंकि तुम्हारे पास capital limited है. You need to determine the efficient set of portfolio. Efficient set of portfolio कौन सा हो गया? जिसमें आपको maximum return मिले for a given level of risk और minimum risk for a given level of return. ठीक है? तो आपने क्या किया? Out of all the feasible options, you have selected out the efficient set of portfolio. Now, for example, आपने set out किया so ठीक है feasible options, and now you came across only 3 to 4 efficient set of portfolio which fulfilled all your requirements depending upon the risk and return. Do you think you can invest in 4? No. Now, depending upon the 4, you need to depending upon all the factors, you need to select out only one portfolio out of those 4. How will you decide? It will depend upon your indifference curve of investor. What is indifference curve? Indifference curve would mean utility or the satisfaction of the investor. Few investors would want that, yes, I need, more risk. I need more risk, more return. So they are risk takers. And few will want कि नहीं यार हम तो safe होके चलते हैं, we will require lesser risk, चाहे हमें return थोड़ा कम ही क्यों ना मिले. So हर investors की हर need, हर utility, हर satisfaction अलग होगा. And depending upon your efficient portfolios and your indifference curve, you will be selecting the optimal portfolio, which is the best portfolio for my investor, depending upon his satisfaction level, depending upon his risk capacity, return requirement, expected returns, everything. You consider the optimal portfolio. Now this can be understood through the example. Let's say you have selected P1, P2 and P3. These are the portfolios. This represent my expected return and this of the portfolio and expected risk of the portfolio. Now these are the three indifference curve of the investors कि मैंने ये IC plot करे. Now this is the efficient frontier. Efficient frontier क्या था? Efficient frontier वो होता है when you graphically represent your efficient portfolios. You join these point and you got the efficient frontier. The point where the efficient frontier and indifference curve is tangent, it is the point where you will get your optimal portfolio. Okay, this may vary from investor to investor. Why? Because in case आपका indifference curve ज़्यादा है, higher है, lower है, तो it will depend upon your risk capacity. Maybe you lie above है अगर तुम्हारा attitude अलग है, and you may lie lower अगर तुम्हारा attitude अलग है. तो indifference curve may vary and efficient frontier would be different. The optimal portfolio would be different for different investor. What is the limitation? Limitation is that you require huge data input requirement. Why? Because you need to calculate the covariance risks, expected return of the securities of the portfolio. तो बहुत ही ज़्यादा time consuming भी है, बहुत ही ज़्यादा data requirement भी है इसमें. And it says कि जितने से यहाँ पे हमने क्या पढ़ा, अगर इंडिफरेंस कर्व एक इन्वेस्टर का अलग है तो उसका ऑप्टिमल पोर्टफोलियो अलग आएगा. ठीक है. एंड अगर प्रेफरेंसेस अलग है तो इंडिफरेंस कर्व फिर अलग आएगा. योर पोर्टफोलियो में वेरी फ्रॉम अकॉर्डिंग टू इन्वेस्टर टू इन्वेस्टर. तो जितने इन्वेस्टर उतने ऑप्टिमल पोर्टफोलियोज. ठीक है. Now, to overcome these two limitations, we came across the capital market theory, which was just an extension of the portfolio theory. So how did we actually overcome these problems? Was huge data input requirement का problem कैसे solve हुआ था? That instead of calculating the covariance or the risk or the standard deviation for each and every security, you just take a base. क्या base लोगे? You will take index, Sensex, Nifty. ठीक है. तो market का आप standard deviation और market का covariance ले लो जो इन securities के covariance को represent करेगा. So instead of calculating individually, you just take the market covariance या market risk का as a base. ठीक है. Now optimal portfolio और investor का utility analysis और this indifference curve का limitation overcome कैसे हुआ था? In capital market theory, it said that you invest in the risk-free asset. तो हमने एक नया term डाला risk-free assets. Risk-free assets क्या होते हैं? Government securities, जहाँ पे risk नहीं होता. ठीक है. तो वहाँ पे standard deviation क्या हो जाएगा? Zero हो जाएगा. तो every investor need at least this minimum risk. उसके ऊपर it depends upon the investor. लेकिन हर एक इन्वेस्टर को एक मिनिमम रिस्क तो चाहिए जो उसे मार्केट में या गवर्नमेंट फ्री सिक्योरिटीज में मिल रहा है. गवर्नमेंट रिस्क फ्री सिक्योरिटीज में जो उसे मिल रहा है. तो लेट्स से यू इन्वेस्ट इन बैंक एफडी 6%. ठीक है. तो मिनिमम रिस्क minimum return that you are expecting from your investment is at least 6%. That's why you are investing in other securities to earn more. ठीक है. Now, these are the few assumptions of the capital market theory. And the first and the most important assumptions was the risk-free asset. Risk-free asset in the market beside the risky asset. Because risky assets pay investors ka risk and preference steps may vary. But risk-free assets pay har investor एक ही उस पे होता है बेस पे कि at least I want this particular risk-free asset. And you can invest and borrow or lend at any amount at risk-free rate. What does it mean? कि अगर मैं बैंक में जाके बोलूँ कि 8% पे मुझे FD चाहिए तो it will provide me with the 8% of FD. But when I just come, to bank once again, कि मुझे loan चाहिए, I need to borrow funds, so also it provides me with 8%. So this is a kind of a contradicting, assumption of this capital market theory, that risk borrowing and lending does not actually happen at the same rates in real life. Now let's quickly understand this diagram. This is the minimum risk that you will earn from your risk-free securities. This is the SML. Let's say you have 1,000 rupees. If you invest in risk-free securities, you get 5%. If you invest in markets, you get 15% because you are taking here. ये कैसे आ रहा है तुम्हारा निफ्टी से डेटा सारा लेके द एवरेज रिटर्न ऑफ द मार्केट. ठीक है. इफ आई डिसाइड कि मैं 50-50 इन्वेस्ट करूंगी दोनों में, ठीक है, तो दिस इज द इन्वेस्टमेंट दैट आई विल बी गेटिंग. दिस वुड बिकम 25 and 1,000 into 50% into 15%. How much? 75. 100. ठीक है. So here it is 100. ठीक है. Now if I decide कि मैं सारा का सारा पैसा मार्केट में ही इन्वेस्ट करूंगी, so this would become 150. तो this is the 150. Now I decide कि यार मुझे तो और रिस्क लेना है. ठीक है. मुझे I am a very risk taker kind of a person. What I do, 1,000 I invest in my pocket. ठीक है. जो भी मेरी पॉकेट में 1,000 रुपीज है, I will invest that and I take 500 borrowing. ठीक है. मैं और रिस्क लेती हूँ. मैं okay, let's do it here. Okay. Now I am very risk taker kind of a person. 1,000 I invest from my pocket and 500 I borrow. So 1,000 पे I will get 15%. ठीक है. Sorry, 1,500 पे I will get 15% because I have invested my full money in market. So I got 225 as my return, but I need to pay the interest on whatever amount I have borrowed. At what rate? 5%. What was it? Risk free. हम indefinite amount borrow भी कर सकते हैं and lend भी कर सकते हैं. तो 500 पे 5% का interest, that is 25. This will become 200. So if I was investing 100% in the market, I was getting 150. If I doing proportionate, so I was getting 100. And now if I borrow and I just invest, I was getting 200. So return बढ़ रहा है as you take more and more risk. ठीक है. Then this is the formula that you need to remember. This is nothing but this is the minimum risk that you were getting plus the additional risk that you were getting. 15% minus 5%. ठीक है. But this was upon the risk of the market. But मैं अपने portfolio का risk निकालूंगी into P. ठीक है. तो this is the CML. So expected return of portfolio is nothing but the minimum return that you are getting is risk free. The risk premium over and above your risk free investment, what you are doing is your premium. That depends upon your market portfolio. लेकिन मार्केट का रिस्क मैं नहीं देख रही, मेरे को क्या चाहिए अपने पोर्टफोलियो का रिस्क. ठीक है. And remember, standard deviation is a measure of the total risk. ठीक है. ये याद रखना. Let's solve this question. This is very easy kind of question. ठीक है. रिस्क फ्री क्या कहते हैं? 4% है. मार्केट कितना दिया हुआ है? 12%. मार्केट पोर्टफोलियो का स्टैंडर्ड डेविएशन कितना है? 5%. Find out whether these portfolio are efficient or not. We'll do just one. एक्सपेक्टेड रिटर्न, तो हमें फॉर्मूला लगाना है, ठीक है, RF risk free is 4% plus 12% minus 4%, ठीक है, upon the total risk, that is sorry market का risk पहले लेंगे, then we will consider the 3%. Let's solve this question. It will come out to be 8.8%. Do you think it is efficient? The expected return which is given to us is this, but at least I should earn this according to my CML theory. So of course I am earning less than what I should have earned, so it is not efficient. Let's check. Now we have moved on to capital market theory to CAPM. The major difference is only that capital market theory considers my total risk and capital pricing, asset pricing model considers only my systematic risk. Okay, it does not consider your unsystematic risk. एक major assumption पे चलता है ये कि जो investor है, he has diversified all the unsystematic risk and now he is investing in the market just to earn the return over the systematic risk. ठीक है, मार्केट की ना एक बहुत ही बेसिक पॉलिसी है, इफ यू आर इन्वेस्टिंग इन द मार्केट सिस्टमैटिकली द मार्केट विल रिवॉर्ड यू, बट अगर आप अनसिस्टमैटिक काइंड ऑफ इन्वेस्टमेंट कर रहे हैं, द मार्केट विल डेफिनेटली नॉट रिवॉर्ड यू. तो सिस्टमैटिक रिस्क इज द बेसिस ऑफ दिस थ्योरी. मार्केट पोर्टफोलियो, मार्केट पोर्टफोलियो क्या होता है? एफिशिएंटली डाइवर्सिफाइड पोर्टफोलियो जहां पे तुम्हारा अनसिस्टमैटिक रिस्क बिल्कुल नहीं होगा, ठीक है. एंड द टोटल रिस्क ऑफ द मार्केट पोर्टफोलियो, टोटल रिस्क में क्या पढ़ा था मैंने? अनसिस्टमैटिक रिस्क होता है और सिस्टमैटिक रिस्क होता है. CAPM की मेजर अजम्पशन है दैट इन्वेस्टर हैज डाइवर्सिफाइड ऑल हिज अनसिस्टमैटिक रिस्क, तो वो क्या हो जाएगा? टोटल रिस्क. तो मार्केट पोर्टफोलियो इज नथिंग बट व्हेन एन इन्वेस्टर हैज ओनली द systematic risk and not the unsystematic risk. Beta is something that we have already calculated, so that is the same formula. See, beta का मैं एक और formula ऐसे भी बना सकती हूँ, covariance of securities and market. इसकी जगह see, I am just opening up the formula. ये I have covered in chapter 3. You can just watch. तो ये काट सकती हूँ, ठीक है. तो this would become, okay. Now let's solve this question very quickly using the Excel. Okay, now let's solve this question using the Excel. Just writing down the probabilities. This is the return from security G, and this would be the return from market portfolio. Let's calculate the expected return from G. This would be, okay. Sorry. This would be the expected return from market portfolio. Quickly calculate the deviation of G. How do you calculate the deviation? Go and check it out in third chapter. Deviation कैसे निकालेंगे? 12 minus, sorry. Okay, now we will be calculating the deviation. Deviation is nothing but this minus 12. This minus 12. this minus 12. ठीक है, deviation of market portfolio would come out to be this minus 15, this minus 15 and this minus 15. नेक्स्ट स्टेप क्या होता था, डेविएशन का स्क्वायर करना. Similarly, this is for G. Now market portfolio का deviation का square I'll do. Then the next step is PI into deviation का square. See, you can miss out few steps if you don't want to do this very step by step. This is to just make things simpler कि तुम कुछ भूलो ना. अब market portfolio का, ठीक है, this is deviation of market portfolio into 2. Okay. The next step that we used to do was to find the covariance. Covariance का अगर आप लोगों को formula याद हो, it was nothing but PI into D1 into D2. ठीक है, तो निकाल देते हैं जल्दी से. P1 into P into D. This is the deviation. D1 into D2. This is the covariance. This will come out to be. अब बचा एक है निकालने के लिए, बीटा. बीटा कैसे निकालना था, कोवेरियंस डिवाइडेड बाय मार्केट वेरियंस. ओके, कोवेरियंस क्या आया मेरा, दिस डिवाइडेड बाय मार्केट वेरियंस 0.67 is the beta value. Okay, now let's move on to the next question. This is the next question. This is the very simple question. You can do it by yourself. The only difference is here the probabilities were assigned. Here the probabilities are not assigned. तो हम n वाले formula से निकाल देते हैं beta. Now the CAPM model. What does CAPM model talks about? CAPM model talks about the systematic relationship between the expected return and systematic risk. Okay, here we are not talking about the total risk, we are only talking about the systematic risk. Investor will get reward only for bearing the systematic risk and not the unsystematic risk. ठीक है, CAPM की बेसिक assumption ही यही है कि इन्वेस्टर एक ऐसा पोर्टफोलियो होल्ड करते हैं जहां पे उसका सारा अनसिस्टमैटिक रिस्क डाइवर्सिफाई ऑलरेडी हो चुका है and there is nil unsystematic risk. Okay, and it is known as the efficiently diversified portfolio. These are the few assumptions of CAPM model. Okay, these are more or less same to the capital market theory, but the only few differences here is that perfect competition in the market, there is no transaction cost or taxes. This is the very unrealistic kind of assumption in the real life. Second of all, the unrealistic assumption is that if investors hold the efficiently diversified portfolio having no unsystematic risk. Okay, ये पूरा मॉडल ना इसी के ऊपर बेस्ड है कि अनसिस्टमैटिक रिस्क है नहीं मेरे पोर्टफोलियो में, बट इट इज एक्चुअली वेरी वेग टू से कि हम सारा का सारा अनसिस्टमैटिक रिस्क डाइवर्सिफाई कर ले. कुछ ना कुछ अनसिस्टमैटिक रिस्क हमारे पोर्टफोलियो में बच ही जाता, तो यू कैन राइट इट एज अ लिमिटेशन. कहाँ यूज होते हैं CAPM मॉडल, वेल्थ मैनेजमेंट इंडस्ट्री के लिए. यू नीड टू चेक इट आउट कि मेरी सिक्योरिटीज अंडर प्राइस्ड है, ओवर प्राइस्ड तो नहीं है. और द कैपिटल बजटिंग डिसीजन वेयर यू नीड टू कैलकुलेट द WACC, यू यूज द this model to calculate the cost of equity. Very important, it must be noted that the risk-free rate of return and the market risk premium are common to all securities because every person would be investing वो तो ये मिनिमम कमाएगा ही कमाएगा, जो डिफरेंस आएगा दैट वुड बी बिकॉज ऑफ द बीटा, हाउ मच रिस्क यू आर रेडी टू टेक, ठीक है। द ओनली थिंग दैट कॉजेज डिफरेंस इज द बीटा. The higher the systematic risk that you will take, the higher the return that you will get. तो फॉर्मूले में बेसिक फॉर्मूला जो हम उसमें पढ़ते आए थे CML में was this only, but only difference is यहाँ पे systematic risk आ जाता है और वहां पे हमने क्या पढ़ा था, total risk. तो हमने क्या किया था, divided by market risk से divide and into portfolio risk से multiply, क्योंकि हमें वहां पे टोटल निकाल रहे थे, यहाँ पे हम सिर्फ सिस्टमैटिक निकाल रहे हैं, एंड बीटा इज द इंडिकेटर ऑफ द सिस्टमैटिक रिस्क. Now let us understand this with an example. Let's say RF risk free, risk free asset का return is 5%, market का is 11%. प्रीमियम कितना मिलेगा अगर तुम मार्केट में इन्वेस्ट करोगे, ठीक है. लेट्स से सिक्योरिटी टी में तुमने इन्वेस्ट किया, तो रिटर्न क्या हो जाएगा, 5 + 6 into risk you are taking, that is 1.5, so you will get 14% of return. Now you invest in such a kind of security जहां पे systematic risk low है, that is beta is 0.5, तो तुम्हारा जो प्रीमियम है that would be multiplied by the 0.5, this would come out to be the 8%. So the less systematic risk you take, the lesser returns that you are getting. It must be noted that the security with high beta has the higher expected return as proved above. Now, let's do a common sense test here. If I tell you कि यहाँ पे you have calculated 14% as an expected return and the actual return that you are getting on your securities is 13%. What do you think? Is it an underpriced security or an overpriced security? उम्मीद 14% की थी लेकिन सिर्फ मिला 13%, तो it is an overpriced security, ठीक है. Now what is SLM? SLM is nothing but the graphical representation of the CAPM model. What is SML का full form is security market line. तो CAPM का graphical representation है तो expected return and beta factor ही indicate करेगा, ठीक है. एंड उसका स्लोप कैसे निकालेंगे, रिस्क प्रीमियम. रिस्क प्रीमियम इज द ओवर एंड अबव रिटर्न दैट यू आर गेटिंग फ्रॉम द रिस्क फ्री, ओवर एंड अबव ऑफ द रिस्क फ्री एसेट. सी ये ही कंसेप्ट मैंने अभी 13% एंड 14% पे समझाया कि हाउ यू विल बी कैलकुलेटिंग द अंडर प्राइस एंड ओवर प्राइस सिक्योरिटी. Now let's understand this question. This is very easy. Risk free asset is 5%. Let's do it on an Excel. Okay, now it says the actual return of security P and security Q is 12 and 16. ये तो हम बाद में देख लेंगे, पहले हम निकाल लेते हैं एक्सपेक्टेड रिटर्न कितना, उसी से हम कंपेयर करेंगे जब भी पता चलेगा, ठीक है. Expected return of P and expected return of Q. How will I calculate the expected return? Through the CAPM model. How did I get to know CAPM model है is through the beta factor that is given in the question. ठीक है. Risk free asset is 5% and beta factor is 0.7. This is the 15. तो risk premium कितना हो गया, over and above is 10. If I calculate the expected return, then I say risk-free asset plus premium into the risk that I am taking, systematic risk, that is 12. So this will come out to be 12. Let's use it same for the Q. Risk-free over and above कितना मेरे को मिल रहा है, ओके कितना मिल रहा है मुझे, ओवर एंड अबव इज 15 minus 5 into the beta factor 1.3. So see, beta factor ज्यादा था Q का, the better systematic take risk that I take, the better return that I am expecting. Okay, now tell me, is it overpriced or underpriced? You have expected 12%. P and you are earning actual 12%. So it is on SML line. Okay. You were expecting this, but you earn only this. This is overpriced. Okay. So this is done. Let's understand the difference. The next concept is the difference between the capital market line and the security market line. I don't think ये important है, but this is the past paper question from 2016 and I took it from the 10-year book and I just cut copy paste there. Let's do it a read once. Relationship क्या है? CML में relationship was the rate of return of a portfolio and the total risk. But हम जब SML पढ़ रहे थे तो हम सिर्फ systematic risk की बात कर रहे थे. Risk return में क्या होता है? Studies risk return relationship of only efficient portfolios. यहाँ पे we are studying all kinds of portfolios. Securities does not study the risk return relationship of individual securities. यहाँ पे individual securities की बात ही नहीं करता, ये सिर्फ portfolio की बात करता है. ठीक है, यहाँ पे individual securities की भी बात हम कर सकते हैं. Optimum portfolio, it finds optimum portfolio among the given set of portfolio. It finds कौन सी securities overvalued है या undervalued है. In addition to the construction of the portfolio. Sources, that was a portfolio theory. Here it is a CAPM model. Now, what is the limitation? We have discussed assumptions को ही इन्होंने criticize करके limitation बना दिया है कि थोड़ी simplified और unrealistic assumption है, no transaction cost and no taxes in the economy, perfect economy मान के चलते हैं CAPM model में, which does not exist in the real life. Beta is not at all constant. Beta that you calculate is keep on changing. It actually keeps on changing. Whatever beta you are calculating is using the historical data. Okay? And something that has been calculating using the historical data, the past values are not very useful. Okay? Now that's it for the chapter. The chapter is over. The rest of the question you can do it by yourself. The basic formulas I have covered, the basic concepts I have covered, and don't forget to share and subscribe with your friends, share it with your friends, please, please, please. Okay. Thank you for watching. Now the chapter portfolio return and risk is over, and make sure that you watch both the videos to understand all the concepts, all the practical questions. And if you try to do the rest of the question, you can just calculate using the particular formulas that I have used in both the videos. And the next video I will be coming up with the equity analysis. Equity analysis is the, I guess, third unit of our chapter. Thank you. Bye. Take care.